Hey guys, how's it going? It is Friday, November 8th, 2019. You may remember the latest Fed action was just last week on October 30th. The Fed dropped its benchmark rate by 0.25%. Yesterday, rates on mortgages and treasuries actually hit significantly higher levels than just before the Fed action a week before. Hi, my name is Russell McDonald. I'm a mortgage broker with Tradmore. It's a mortgage company in the San Francisco Bay Area. My company's name stands for Trusted Advisor Mortgages, and that has to do with the business model we use that focuses on partnering with CPAs, enrolled agents, financial planners, and other trusted advisor financial professionals. So to recap, Fed dropped rates by a quarter last week on Wednesday. That day, mortgages and treasuries moved by just a few hundredths of a percent. Lots of people think that when the Fed drops, mortgages should drop in lockstep. It just doesn't work that way. But then the next day, news came out that there was trouble brewing with Brexit. The Chicago PMI report came out and it was dismal. And it was looking like the China trade war was getting worse. That news gave us a one-day rate drop in mortgages and treasuries of a good 0.8%, which is a big one-day move. So that negative economic news put us in a much better position than the Fed movement. However, since then, we had some really positive economic news on Friday. So that moved our rates up a little bit. Then Monday through Thursday this week, rates went up a little bit more every single day because there were increasingly stronger rumors coming out about an imminent resolution to the trade war. And like I said, that's pushed rates up just a little bit higher every day through Thursday. So ironically, on Wednesday the 6th, mortgages and treasury rates were actually higher than before the Fed action a week earlier. Okay, I know I'm repeating a lot of what I've been saying over the past week in previous videos, but the reasons are very important. Yesterday, there were some very strong statements out of China that made it sound like they had a verbal agreement that had been made on the trade war issues, and treasuries had their biggest one-day movement to higher rates since the day after the presidential election in 2016. Yesterday, rates moved up in treasuries by 0.15%. The day after the election, they moved up by 0.2%. Those are movement amounts that are almost unheard of for it to be that big. And yesterday, both the Dow and NASDAQ hit record highs. Yesterday, treasury rates closed at their highest level since July on this news. I mean, this is big. I posted yesterday that the actual news that was causing the movement in the bond market really seemed to me to be overblown, and that we're probably going to see a reversal next week. This has been a real roller coaster that we've been on, guys. So listen, today, President Trump came out and said, no, we haven't agreed to roll back the tariffs. So the markets are in a bit of a turmoil. Rates have gotten just a little bit better than yesterday. We had a midday improvement also, slightly better midday. My gut feeling is that we may see rates a little bit lower this coming week, but we are going to have to wait and see. I think that the fact that the news on the trade war is now more negative is going to be pressuring stock prices and interest rates down. Lenders are saying that pricing is getting better midday today because trade talks with China are showing much less likelihood that the tariffs are going to be reversed. Hey guys, this weekend it's the 2019 Realtors Conference and Expo in San Francisco. So if any of you are in the real estate or mortgage industry and in the area, we may run into each other at the conference. Interesting tidbit in real estate and mortgage news. You guys may have seen this. Homestreet Bank has agreed to pay a $1.35 million penalty to settle accusations that it paid kickbacks to realtors and builders in violation of the Real Estate Settlement and Procedures Act, commonly called RESPA. Now, if they had actually gone through, the fines could have been a lot higher. It's very important. If you get into any kind of a deal where you are receiving mortgage commissions for work you do, you have to make sure that you're doing enough of the work and that the amounts that you are paid are in line with the work you are actually doing. Most of the co-marketing agreements and MSAs that I've seen over the years are absolutely not compliant, in my opinion. When it comes to the steps that I have you take to get paid for doing a mortgage for your clients, well, one of the experts who wrote RESPA back in 1974 testified in a deposition that the steps I have my agents follow definitely comply with the work requirements in order to qualify for a commission. Now, he wasn't my expert witness. He was an expert witness for the other side on a lawsuit that the company I used to work for was in several years ago. And this guy, obviously, he doesn't decide these things, but he's one of the original authors, so he understands RESPA better than almost anybody. And in his opinion, the steps that we required and the work that we had people do worked. Never can figure out why people have expert witnesses that testify to things that help the other side better than them. But anyway, if you have any questions, let me know. We're going to have an interesting week next week, and I do think we're going to be seeing rates moving lower again. It's going to depend on what happens. And again, the news I saw yesterday that moved the bond market so much, and I read the comments, and I just said, no, this doesn't mean what people are saying it means. And today we've got some backpedaling. So anyway, I hope you guys have a great weekend, and hit me up with a message if you have any questions. Thanks, guys.